Okay, here's a second video number two. Video number two on battery analysis. Now, in this video, I'm going to show you some technical things about reading into Excel and some issues with read PDF and generic macros file and all that stuff. Also a little bit on the power prices, but the main thing here is that in this Lazard study that I introduced on batteries, in case you're just getting this, is this the first, if this is the first video you're watching on this, Lazard did this analysis, and I give them a lot of credit. They put it on the internet, and I suppose they want to get business for it, like I want to get business for my stuff that I never get. But here, they put some value snapshots. So they did some levelized cost of analysis, but they also took some different U.S. RTO markets. So in the U.S. there was this thing. This is from the EIA. You can see that there's a California, Texas called ERCOT, PJM, which is I think perhaps the biggest. I'm not sure if it's bigger than this one. New York, New England, and there are a lot of areas here voted for Trump that don't have anything at all. And there's this MISO thing as well. Now, they also in this analysis they put the different ISOs in here, and they said, well, some of the savings, some of the revenues come from demand charge savings, because if you've got a battery, you can take your battery and use it to reduce your, if you're a customer and you're paying a demand charge and you have a sudden spike in electricity, you can use your battery to reduce your demand charges, and then you can get paid for the ability to respond to demand and turn your discharge your battery when the power prices or demand gets really high. And then there's this frequency regulation allowing the batteries to just really respond very quickly to changes in demand. And then they have some statistics on battery size. Now what I did is, I kind of put this into an Excel file, and I tried to copy all the footnotes, and then they have, for each of the regions, they have a nice little thing here. Now I guess I'll do this quickly now. Okay, this is easy. You copy this and you paste it into Excel. Okay, and you get this, and you press Shift Control A, and you click on the first one, and that happens, and that should work really pretty easily. Okay, I've got a really large file open, so it went a tiny little bit slowly, and that's easy. Okay, well, we're going to talk about a couple of things that are a little more difficult, and then I just press Shift Control. Oh, I shouldn't have pressed Shift Control D because I've got my thing on. Okay, that was just a bunch of blabbering. Sorry. I hope I'm not getting dislikes for that. Oh my God, I'm paranoid. Where was I? Okay, now you go, and they also have some stuff here. They have some assumptions here, which are nice little assumptions. They put their assumptions here. And what we're going to do is I'm going to reverse engineer their model in this one. So if you want to put these little assumptions in here, you can do the same thing with this Shift Control A, but this time you use this one down here. And this one down here, this third one, that one keeps the columns there for you. And you put 0.01, and you just press Control C, and then you Alt EM and Alt EM, and then you just whoops. Okay, Control C, Alt EM. This is just Alt E S. Ah, come on! Oh no, and I'm not swearing ever again in a video. Alt ESM. Sorry about that. And then all I did was take these for the different regions and put them over here. Okay, and then I said, okay, let's once we have these arranged. So you have to do a little bit of manual stuff. Sorry, Alt EL. I'll delete that sheet, and then I put them in this assumptions page. So we have the different, we can start to see in the different regions, these were sizes of batteries. Now the real objective here is to show you what it means when they say something like cycles per year. I think you can interpret that. If you're in solar, you talk about that as the hours, the yield, the kilowatt hours divided by the kilowatt peak. They have the size, which they talk about in MW. That's the size of the charge or the discharge. We got to be really careful with the terms. And this is megawatt hours. Well, that's the amount of megawatts. This you can charge it for 4 hours, 2 hours, half an hour, 2 hours, 4 hours. And somehow they come up with what's the right optimal kind of configuration, what kind of battery do you want to put in with different amounts of charges, basically. And then they have the efficiency of the battery, which means if you charge it, you don't get the same discharge. So we got to be careful. And then they have some nice little EPC costs and O&M costs and lifetime of the batteries and some different regional scalars. Okay, these are regional. For different regions, you put in a little bit higher or lower costs. Okay, so let's look at one, and then what I'm going to do is show you a little more complicated analysis, perhaps. Maybe I'm kind of reading the files in. Okay, now so what I did here is just copied. You know, we have the data here. This is our financial model, and now let's start reverse engineering this financial model. Okay, so we have all the data in. Now, in this, I press Shift. I have the generic macro open, and now I press Shift Alternate C. So I have a big new versions of generic macros and of read PDF. That's why I haven't made macros, videos, not macros. I'm getting confused in my old age. This, I should put little checkboxes here before I put the next version up. Okay, and then you just press color sheet. So this came from, these are the coloring options from Shift Control C, but it should say this, maybe I'll change it. This is from pressing Control Alternate C, and you just press color sheet and you pick your options. And this one, it came from the other sheet. So so they gave us an assumption for it, and I notice how I changed it a little, and then I used the indirect command, which I'm not going to really talk about, but I also put it so if you use the indirect command and you use it in a simple way, it colors it. So we have our red sheet here, and I take it's PJM. If I would put just H here, oops, look at this, H. Okay, then it would take me, and I better make sure I have the calculations options, okay. Okay, and then it would use whatever is in column H, which the size was 1,000, and then the potential discharge from one cycle. It's the energy per one cycle of discharge. So I'm going to put it back to F. That's just how I think if you're copying a lot of things, I still am a kind of believer in this indirect function to go and get the assumption. So this says take it from essentially F11, our favorite kind of key, and this says take it from F12. I take it always from F and just go in, and by doing that you can just copy this whole thing and then change this from F to another column. Okay, so then we have in PGM we only had half an hour of storage. Now this immediately raises a fascinating question. Can you count the capacity of a peaking plant in the same way you can count the capacity of a battery? If I have a peaking plant, I can run. This is the discharge, is the capacity. That's how many hours I can run a peaking plant for. But on this one, I can only kind of run it half an hour. How much capacity credit should I really get? If I have a day where I have a really big peak load day, I have to keep charging it and recharging it. The value of capacity is very, very tricky. Extremely tricky. Let me say it again. If you have a peaking plant that can run, you just switch it on. It gives you 2,000 kilowatts or 2 megawatts. And it gives you all day. I'm not criticizing batteries at all. I'm just saying it's a different kind of thing. For a battery, we can only run it for half an hour, and then we have to charge it again. And if we're running out of capacity on that day, how are we going to charge it? And then it gives you the number of cycles per year, which is a really kind of confusing thing. But if you multiply the number of cycles by the amount of storage energy, this is really, I almost should call this potential storage energy. Then you can see, well, how much power do I get? And then they have the depth of discharge, which was very confusing in this one, because up here they say reflects full depth of discharge. That means every time you charge it, you're going to completely uncharge it. You're going to get the total amount. But then they had a 8% here. I'm not criticizing at all. I think it's wonderful what they put on the website and the information they gave. So this is not a criticism. I'm just confused. And then they gave some data on the cost of the system. They say the cost of the DC system and the AC system. I'm not quite sure. I need to know more. There's an inverter to get the DC from the AC. I'm not sure if this is the cost of the converter. Notice they do it on the basis of kilowatt hour storage, not kilowatt hour capacity. So in the subsequent video that I'm going to do in a minute, I'm going to talk about the database. We're going to talk about the database and where to get all these things. So these were just input. I couldn't get this. I didn't bother to put this in some sort of I could have kind of copied it and put it in Excel, but I didn't bother. Okay, I just typed it in. That's why they're blue. And again, Shift-Alt-C, I put number 1, and number 1 means it's blue. Enough of that. Okay? And so the first thing I said is, okay, well, then they put some scalars for the balance of the system. I said, well, the DC is the regular, and then I said, well, let's multiply the scalars. Remember, this came from the PJM line here. This came from this line down here, these things. Okay, so this was line number 22. If you inserted a line, you'd have to be really careful here. I'm not didn't do that perfectly. Okay, don't give me a dislike because of that, please. Then, so this gives you the total cost after this is per kilowatt hour of storage. For one charge. Now this means, so if it might make sense. If I'm buying my computer, I want to buy I'll pay more for more storage capacity. I don't care quite as much as how long it takes to charge. I want to know how much battery life do I have. That's when you buy things. So maybe that's okay. But then I also said, well, let's put the 1,000 here, the capacity in, which is right here. Excuse me. So this is all our this is our EPC cost. They added an EPC cost hour. This is the total amount you spend for this battery that has either defined as 2,000 kilowatts of charging or discharging, but only stores for half an hour. And you get the cost. You can get the cost per kW of discharge, I guess. You know, this is well, I better call it charge, because we lose a little bit of efficiency. So these things, this is the real idea of this video. They're all a little confusing. And then here's what they do. They give you a warranty that's 2% of. Now I tried to compute this all myself, and I got this construction cost. But then they give you the warranty, and they say the warranty is 2%, and this is just reverse engineering. And this warranty is I minus I41. So I took all of these blue things, which is again just copying the data. This is the warranty value, and you notice that this is all flat. This is all constant. Okay, and then they give you the warranty cost, and they say, okay, well, where are we? Okay, and then the warranty percent is 2%. So if you just take this number divided by 2%, that gives you an implied cost of 1.05 million, whereas the actual cost, this one I computed, was a little bit different, not very much different, so that's okay. That's kind of what I'm just trying to understand. But then they gave you this cost in the model, this one, 840, and that 840 was up here. Okay, and that is about 20, that's exactly 20% different. Exactly. So there was some adjustment, and I looked all over the study to find this 20% adjustment. I couldn't find it. Maybe they're just reducing the cost. I don't know if there's an investment tax credit, but they didn't mention that. Or maybe they're just saying it went down by another 20%. Or maybe we just cut it by 20%. I don't know. And then they give you the demand response payment and the regulation payment. Now this and that comes from up here. Now there are two issues with this, two big issues. Here's the modeled payment, 63,000 per megawatt year, or 63 per kilowatt year. You can divide 1,000 here and divide 1,000 here and call it kilowatts. I hope everybody would agree with that. Okay, and then they give you the charging cost of 48 USD per megawatt hours, and they give you a regulation payment of 40 per megawatt hour. Now these are some of these are the confusing things. Now this model payment of 63, I think that's probably very reasonable. Now, when they give you these, they give you demand response, which perhaps that's paid on an hour-by-hour basis. Demand charge, that's kind of typically a demand charge is based, you pay per kilowatt per month or per kilowatt per year or something like that. That's typically what this is. Or maybe demand response is too. So I try to figure out, and then they have by far the biggest revenues are from frequency regulation. And the weird thing is they call this 40 per megawatt hour, and they even have a little footnote. Now just to give, and then they have a charging cost of 48. Now this is where I get confused, and I'm not saying, I'm just asking questions at this time, and I'm trying to just show you what I did. I hope you're not going to get really angry again and say, well, what the heck is he doing? Well, this is our file we just made earlier. I had to actually fix a couple things. I'm admitting there's no secret here, and this is the PJM electricity daily price from all the way back from 2001 to 2017. And let's just look at how about let's just look at from 2016, okay? So we can kind of see what's going on. Here's the price, and this is on peak price, on peak. So the price is about, it's been hovering about 30 USD on peak, not off peak. So if you're paying 40 per megawatt hour, there's something, it's not really megawatt hours that you could be paying for regulation. That's how much I'm paying to get my lights on. Why do I pay more for regulation than the total cost of energy? Maybe somebody give me a good example. And so I'm putting it back now. The other thing to note is on this particular one, if we're running for one, if we're putting 1,459 cycles per year, we just divide that by 8,760 or 8,784 for the leap year, whatever, and we get kind of a capacity factor, which I think is okay to compute. You might call it something else, whatever. And so you're running it quite a bit of the time, and the question is, why would you charge it at 48 when the price was around 30? And why would you pay regulation of 40? That's my question. And the capacity payment, well, that might be a separate market and all that. It's a separate market in PJM and all that. So here's the next, after examining the construction cost, I go down and try to replicate some of these other things. The first thing we need is some inflation indexes, and so I said, oh, well, they have 63 and 40, that's from above, and let's just inflate these the way they put the inflation assumptions in, and they put some inflation assumptions in for revenues and expenses and all that. I don't care about all this tax stuff right now. I just want to figure out kind of what's going on. The first thing I tried to do is replicate the O&M cost. They had some O&M is 225% of the battery cost, which is nice to get that number. That's certainly nice that we can get that number and we can start to look at this in other situations. Now, notice that when where's the O&M cost, please? O&M cost here. Notice the O&M cost. It looks like I have something wrong here. The O&M cost is higher when we have a higher amount of cycles. Okay. And oops. Okay, I fixed it. So they have an O&M cost in their financial model. That just comes from the minus G40. That just comes from upstairs right here. That's the O&M. They have an O&M cost, a warranty cost, a charging cost, and total cost. And then they have all of these revenue items, the demand charge, the demand response, the frequency regulation, okay? So to illustrate how it works, then we take this and then we say, okay, well, here's the total cost of the project. Now you could use other costs, and I didn't get all upset about this one. And then let's just multiply this one by the cost, and then let's put some inflation in it. And which year they started with the inflation was a little bit confusing. I didn't quite see it. And then I get a little bit of a difference. Okay, I suppose if I would have started the inflation a year earlier, I would have got a different number. But then when I did it on I'm switching to other pages, I get a little bit of a different answer. All right, and then the next one, this is where it started to get okay. I put the charging cost in from the model. So again, we're just replicating it. I go upstairs and get the charging costs. And then I put in charging cost per megawatt hour that they have, and again, I have an enormous question about this. Why is this not off-peak? You know, you can hold the storage. You can hold the storage in a battery. Why wouldn't you store it with off-peak costs? Which, and even the on-peak costs were less than 30. So there's a data question here. But we just divide the two, and we get the implied energy that you have to get for charging. And the nice thing about that is that after you take the efficiency and you say, okay, we only have 89% efficiency, how much energy would you actually deliver is down here. And then I compared that energy delivered from our little energy in the cycle analysis up here. So that's the good news. That all kind of worked. That little energy analysis all kind of worked. Okay, and you have to see, the interesting thing in a minute is, I think you saw that for some of the other systems, we only had, instead of 1459, we only had 74. If you wanted to put the implied capacity factor for all of these, then they're really low. It's 74 divided by 8760. Okay, I'm so nervous about making this video too long, but you know, this one was pretty high, but the rest of them were much smaller, which might be totally legitimate. Then I get a problem. Then I put the regulation revenues, this 266 regulation revenues, and then I take those regulation revenues and put in the price of the regulation, which they gave me as an assumption here, 40 per megawatt hour, which again I don't quite understand. Okay, it's can't be really per megawatt hour that you actually deliver energy. It's got to be some other unit. And then if I divide that, I get megawatt hours, but this is way, way more. This is almost all the hour. You know, this is a capacity factor of high. This compares to 8760 hours. And so I just called it implied quantity, so that I'm not saying I understand all the regulation. Okay, I don't. And then we have the demand charge revenues, and I think the real interesting question is, should those be compared to the capacity, which is the amount you can charge or discharge. In any instant, you can discharge 2,000. So you could say that's how much capacity I get. That's like running a peaking plant. But this storage, which again for other systems, this storage is much higher. This time the storage was twice. It was kind of went the other way. And for the California one, the storage was the same thing, and for the ERCOT, this Texas thing, it was 4 times. You had 4 hours of storage. Okay, so should the capacity be measured against how much storage you have, or how much is the maximum amount you can discharge? I think it's like this. I think it's capacity. I think it's how much you can deliver in an instant, which is the same thing you have for any kind of peaking plant. Now, in this case, you've got, in the PGM case, you've got kind of an interesting thing. Once you run it for half an hour, you're finished. That's not like this capacity of a regular old power plant. So I'm not criticizing batteries at all. I'm just saying here are some of the issues. So if you take all of these demand charge revenues, which are up here, the sum of these two items here. This is just down here, 23,888. Okay, and you take that 23,888 and you divide that by the 2,000 megawatts, you get a implied capacity price of 11. And the price they had in their assumptions was 63, so I couldn't quite reconcile that. You could also take you could just take the amount of energy you produce, okay, and divide that by the regulation revenues and see, for a kind of capacity factor of this, we have 1,400 or whatever the hours we had. How many hours did it? 1,459 hours that we're going to sell energy for at 159. That kind of gets into the price spike as a capacity payment. And when we talk about Australia and the markets in Australia where you have no capacity payments and the other markets where you give a capacity payment, we'll go through that. Now, I think I'm going to go through a mechanical one in a separate video, but then I go through the other ones, and in the other ones, there's some consistency. In this case, the O&M was pretty close. This is for NEPOOL, or I call it NEPOOL, I'm sorry, it's called the New England ISO. And then they have a percent difference. I'm pressing Shift Control 7. Okay, and then they have a to get the thing around it, whatever. And then this time they gave you a model capacity payment of 115, which again you should discuss. This is very high compared to the cost of a peaking plant. But maybe, you know, it's a little bit different for batteries, of course. And this was the implied payment, so this time it worked. And also, when we looked at the energy from the delivered, notice there was a tiny bit of degradation here as well. This energy delivered versus the energy from the cycle analysis was again fairly close. And then we'll go to California. In California, there's an incentive payment. They give you, let me see, it's kind of like a renewable one. They give you program participation. They give you something like, it's up here, 60%, and they give, you can get some of it, 50 of the 60% in the first year. So when I went through the kind of capital cost, it was a little bit trickier. But then when we go down to the energy, this time they have a much, much smaller regulation payment. They have a much bigger demand payment. Okay, and then I missed, because I'm sure because I did something wrong with the cost of the construction. You know, I should have taken perhaps this higher one, and then, oh well. Sorry about that. Don't get mad at me, please, please, please. Okay, and then we got we got a pretty close number, and you can look at the charging analysis and see how the efficiency works and the degradation, and you get how much megawatt hours you produce. And this time I put in, again, I always put in a capacity factor benchmark. Maybe that's not good, but I do. This is a capacity factor of only, you know, less than 1% per year for this market. And then you can say, well, for those very few hours, here's how much demand payment you're getting. Sorry, here, this one. Demand charge revenues, just a minute. This better be the oh yes, it's just this demand response. They didn't have any demand charge. So for their demand response, you get paid implicitly in the model here. I did it based on, and this time I took the amount of capacity and reduced it by the efficiency. So this is the amount you can actually deliver in capacity, and we get an implied number of 168. They had 200. So it's a little different. And then you can also get the total energy they displaced, and then this number is and this number is totally wrong. Okay, this is the cost per megawatt hour, okay? And let me This is 900. So this is 1,000. This is kind of a spike you're getting. Okay. And that's enough of this video. I'm going to make another mechanical video on this in just a minute.